Foundations of Payments and the Fintech Landscape. Introduction to the module. The world's financial systems have always been more than just tools of commerce. They are reflections of human ingenuity, societal evolution, and technological adaptation. Understanding how payment systems have transformed from bartering goods to digital wallets isn't merely a lesson in history. It is a key to deciphering the shifting paradigms of global economies. As fintech continues to disrupt traditional financial landscapes, the implications for businesses, governments, and individuals are profound, reshaping the very fabric of transactions and trust. This module explores the journey of payments, their underlying systems, and the pivotal role Fintech Solutions play in this ongoing transformation. Learning objectives. After completing this module, you will be able to trace the evolution of payment systems and their global impact, explain the roles of key stakeholders in the payment ecosystem, compare traditional and modern payment methods, analyze how payment systems drive efficiency in the global economy, understand the features of mobile wallets and QR-based payment. The evolution of payments and financial services. The history of payments is a story of adaptation and ingenuity, shaped by the demands of commerce and human connection. From the early barter systems to the advent of coins and paper money, each era has witnessed a redefinition of value exchange. The transition to digital payments represents not just a technological shift, but a societal transformation, redefining accessibility, speed, and trust. Payments have become more than transactions. They are enablers of connectivity and growth, bridging diverse economies in ways once unimaginable. This evolution reflects humanity's constant drive to innovate, simplify, and connect through commerce. From barter systems to digital payments. Barter, the earliest form of commerce, thrived on immediacy, but crumbled under the complexities of large-scale trade. As civilizations grew, so did the need for standardized value, leading to the introduction of coins and paper money. This was more than a convenience. It created an abstract representation of value that could be exchanged without requiring immediate reciprocity. The 20th century introduced checks and bank transfers, streamlining trust and accountability in financial transactions. However, it wasn't until the late 20th century that credit and debit cards began defining personal and commercial payments globally. In a nutshell, the timeline and progression of the monetary system can be outlined as below. By the early 2000s, digital payment platforms revolutionized convenience, enabling transactions to transcend physical boundaries. The introduction of cryptocurrencies in the 2010s challenged traditional systems, proposing decentralized, borderless forms of exchange. Today's innovations, such as mobile wallets and contactless payments, emphasize instantaneous, user-centric solutions that reflect the modern economy's demand for speed and flexibility. Key players. Payments have always depended on a complex network of actors working behind the scenes. Historically, banks and payment processors served as the gatekeepers of financial exchanges, providing stability and trust. Yet, the rise of fintech startups has reshaped this dynamic, introducing technology-first solutions that prioritize agility and personalization. Banks still play an indispensable role, especially in managing compliance and fostering global trust. Payment processors act as the technology bridges, facilitating smooth transfers between merchants, customers, and banks. However, it is fintech companies, unburdened by legacy systems, that have accelerated innovation. Banks ensure regulatory adherence and provide long-term infrastructure for financial systems. Payment processors innovate to enhance transaction speed, data security, and global accessibility. Fintech startups like Stripe and PayPal have capitalized on flexibility, offering tailored solutions that cater to niche markets and global scalability. The rise of fintech. Fintech did not merely evolve alongside traditional banking, it posed critical questions to the industry itself. Why does cross-border payment take days? Why are financial services inaccessible to billions globally? Why can't transactions be instantaneous, transparent, and scalable? Fintech has positioned itself as an answer to these questions, carving out an essential space in finance. For example, by leveraging technology like blockchain and AI, fintech companies dismantle inefficiencies, providing real-time solutions for transactions once plagued by delays and fees. They empower underserved populations by introducing financial products tailored for low-income or unbanked individuals, fostering inclusion. Cross-border payments, which were once marred by prohibitive fees and logistical hurdles, are now increasingly frictionless thanks to fintech's innovations. Understanding payment systems and stakeholders. Payment systems are the unseen engine of modern economies, orchestrating the seamless movement of value across borders, industries, and communities. These systems are not isolated technologies, but rather interconnected frameworks involving multiple actors working in harmony. From the smallest digital transaction to the largest corporate transfers, the complexity of these systems lies in their ability to integrate diverse stakeholders, ensuring security, scalability, and adaptability. By examining the intricate web of participants, we can uncover how payment systems create economic opportunities while sustaining global commerce. The role of merchants, payment gateways, acquirers, and regulators. Each participant in a payment system plays a unique role, yet their interdependence is what enables transactions to occur seamlessly. Merchants serve as the starting point, initiating the process when a customer decides to purchase goods or services. From there, payment gateways facilitate the technical side, securely transmitting payment information between the merchant and financial institutions. Acquirers act as intermediaries, handling the financial processing of the transaction, while regulators oversee the entire ecosystem to ensure compliance, transparency, and trust. Together, these actors form a coordinated network that balances functionality with security. These participants are, in essence, the pillars of any payment system, ensuring that every transaction is processed efficiently and securely. Merchants, the front-facing entities that accept payments and rely on secure, efficient systems to ensure a smooth customer experience and maximize sales completion. Payment gateways, the technological intermediaries responsible for encrypting sensitive payment data and ensuring that it is routed correctly to all involved parties. Acquirers, the financial institutions or processors that represent merchants in the payment process, facilitating the transfer of funds and managing associated risks. Regulators, the governing bodies that establish legal frameworks, enforce compliance standards, and maintain systemic trust by ensuring all participants adhere to ethical and operational standards. How payment systems power the global economy. The contribution of payment systems extends far beyond mere financial transactions. They fuel trade, empower businesses, and foster global connectivity, shaping how value is created and distributed. Modern payment systems drive economic resilience by enabling real-time transactions across geographies, mitigating risks associated with delays or currency volatility. For instance, cross-border payment platforms reduce friction in international trade by overcoming legacy banking constraints, while digital wallets create inclusive financial ecosystems for previously unbanked populations. The relationship between payment systems and the global economy is reciprocal. As economies grow, payment systems must evolve to address emerging complexities, such as multi-currency transactions, regulatory scrutiny, and digital integration. This dynamic interplay ensures that payment systems are not static, but continuously adapting to meet the demands of a digitized world. Types of payment methods. Payment methods are more than just tools of transaction. They are reflections of how societies prioritize accessibility, efficiency, and trust. The evolution of payment systems has given rise to a variety of methods, each tailored to meet the needs of specific historical and technological contexts. While traditional methods have laid the foundation for financial exchanges, modern digital payment solutions have redefined speed, security, and convenience in an increasingly globalized world. This section explores how these methods coexist, adapt, and cater to a wide range of users and use cases. Traditional payments. Traditional payment methods have long been the backbone of financial transactions, offering tangible and widely accepted forms of exchange. Cash, as the earliest formalized payment method, provided immediate settlement and universal acceptance. However, as commerce expanded, limitations such as security risks and logistical inefficiencies highlighted the need for alternatives. Checks emerged as a secure way to transfer large amounts of money without the need for physical cash. Although processing times and fraud risks posed challenges, cards, including credit and debit options, brought a significant leap forward by integrating security features like PINs and magnetic strips. By the late 20th century, cards had become the most popular payment method globally, offering both convenience and accessibility across industries. Modern digital payments. Digital payments are reshaping how value is exchanged, merging technology with finance to offer seamless, real-time solutions. Unlike traditional methods, digital payments emphasize efficiency, accessibility, and integration with other financial services. Mobile wallets, such as Apple Pay and Google Wallet, provide users with a secure platform to store payment information and conduct transactions with a single tap or scan. Mobile wallets integrate features such as biometric authentication and tokenization, ensuring a high level of security for users. QR-based payments are revolutionizing accessibility, particularly in emerging markets where infrastructure for credit or debit cards is limited. By scanning a code with a smartphone, users can instantly complete transactions, eliminating the need for intermediaries. These modern methods not only address the limitations of traditional systems, but also cater to the demands of an increasingly tech-savvy and mobile-first consumer base, setting the stage for a cashless future. Highlights from this module: the evolution of payments, from barter to digital wallets, showcases humanity's drive to innovate and connect, shaping modern commerce. Fintech firms like Stripe and PayPal leverage blockchain and AI to deliver real-time, scalable, and inclusive payment solutions. Payment systems rely on a network of stakeholders, merchants, gateways, acquirers, and regulators to ensure secure and efficient transactions. Modern payment methods, such as mobile wallets and QR codes, prioritize speed, accessibility, and trust in the digital age. Payment systems drive global trade and financial inclusion, enabling frictionless transactions and economic resilience. Thank you. You have successfully made it to the end of this module.